to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. As the Federal Reserve prepares to taper its asset purchases, investors are preparing to adjust their portfolios. Some are dumping gold. They could be making a big mistake. Sentiment towards precious metals turned negative as prices fell over the past few weeks. Gold and silver markets continued to slide ahead of the Federal Reserve's policy meeting on Wednesday. However, they got a bounce following the Fed's announcement that it would double the pace of tapering in 2022 and raise interest rates up to 3 times.
Federal Reserve officials announced that they are prepared to fight inflation with a series of interest rate hikes next year, suggesting it will begin earlier than they projected just months ago.
We are committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched.
The Fed also announced that it will scale back even further its efforts to stimulate the economy through major bond purchases.
The central bank may well soon begin reducing its asset purchases, but that's not the same thing as reducing its balance sheet or the money supply. Far from it. In reality, even after tapering, the Fed will continue to hold its existing hoards of bonds and replace them as they mature. Recent blowout readings on the Consumer Price Index and Producer Price Index suggest the Fed is way behind the curve on tightening. It almost certainly won't get out in front of inflation next year with 3 measly quarter-point rate hikes. In the meantime, precious metals bulls are eyeing lots of room for prices to rally off current levels. As of this Friday recording, gold is gaining 1.2% for the week to bring spot prices to $1,812 an ounce. The silver market shows a weekly advance of 1.4% to trade at $22.59 an ounce. Turning to the platinum group metals, they got hit especially hard in recent trading, but have bounced back from their low point this week. Platinum prices check in at $945, still down 1% for the week. And finally, palladium, which is rallying strongly here today, is now up 1% since last Friday's close to trade at $1,809 per ounce. Could the Fed's move to taper and eventually hike rates mark a significant bottom in precious metals markets? It's quite possible. Naysayers claim the Fed tightening will be bad for gold and silver markets. Rising rates are a headwind for metals, or so the conventional wisdom goes. There's a lot of misinformation out there on the relationship between gold and interest rates. Some commentators confidently assert that higher interest rates are bullish for the U.S. dollar and therefore bearish for gold. While that may seem logical in theory, it often doesn't bear out in reality. Consider that the gold market reached its last major bottom in December 2015 at around $1,050 an ounce. That happened to coincide with the onset of a Federal Reserve rate-raising campaign. Previously, a third round of quantitative easing was announced in September 2012. At the same time, many analysts assumed that QE3 would provide an immediate boost to gold and silver prices. Instead, the metals markets declined for several months following the Fed's announcement. The lesson is that precious metals markets don't move in direct lockstep with Fed easing or tightening. Gold and silver prices show virtually no correlation in nominal terms. What matters is real interest rates, meaning rates relative to inflation. Real rates can remain negative throughout a Fed tapering and hiking campaign. Real rates are currently at one of their most deeply negative levels on record thanks to the recent inflation spike, and yet gold and silver prices don't seem to be responding as they should. That's understandably a source of frustration for precious metals holders. Some critics claim that gold no longer serves as an inflation hedge. But you'd have to be very short-sighted to come to that conclusion. At this time 20 years ago, gold was trading at under $300 per ounce. It's come a long way since then, as the value of the dollar has steadily declined. Gold will continue to offer long-term inflation protection, though its ups and downs from year to year will be difficult to predict. Inflation is here, and central bankers won't be getting out in front of it anytime soon. The bottom line is that if you wait for the Fed to start cutting rates again or launch a new QE program before seeking refuge in precious metals, you may miss the next big move higher. And now for a quick product announcement. Money Metals is proud to offer our customers a new line of gold and platinum jewelry with purity as high as 99.99% at a far lower spread between retail price and melt value than is often available from jewelers. That's because we are a bullion dealer, founded with the objective to bring you the most precious metal for your money. Naboo Jewelry combines elegant design with properties unique to pure gold and platinum into beautiful luxury and relatively low premiums. Our Naboo products deliver pure authenticity and true value in 24-karat luxury, each piece designed and produced with fine craftsmanship. Offerings now available for Money Metals include bangles, charms, rings, pendants, earrings, and cufflinks in gold and platinum. We selected Naboo products not just for their beauty, but because they fit well with our goal of delivering the most metal for the money. We are confident that you'll agree that these products combine beauty and value like no other wearable form of precious metals. With the holiday shopping season coming to a rapid close, check out the Naboo Jewelry collection right away at Money Metals. Well, that will do it for this week. Be sure to check back next week for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.